Hello and welcome to the Pro Forma Model's 10-year real estate private equity waterfall model. The Readme tab states the model purpose, highlights common use cases, and provides an overview of functionality, formatting, and all of the unique modules within the model. This tab also provides additional documentation, contact information, and a summary of additional products and services available from Pro Forma Models to support your analysis needs. The Waterfall tab begins with inputs to create a sources and uses table. The uses section is the area to input how funds will be allocated on closing. Inputs in the section include the property purchase price, closing costs, fees, upfront capital expenses, and working capital. The sources section is the area to input where funds will come from in order to close. The equity section has an input for the percentage of general partner equity contribution. The inverse of the general partner equity contribution will come from the limited partner. The mortgage source includes an input for the loan to value. Once completed, you can move on to completing the cash flow section of the model. The cash flow section begins with inputs for annual revenue and expenses to calculate the net operating income. Following net operating income, inputs are available for annual interest expense, investment general and administrative expenses, investment management fees, and construction management fees. These items are deducted from the net operating income to calculate the funds from operations. Next, annual capital expenditures are deducted from the funds from operations to calculate the adjusted funds from operations. Finally, the annual principal payments and vacant downtime are deducted from the adjusted funds from operations to calculate the free cash flow to equity. Enter the annual distribution requirement to calculate the cash surplus or deficit as well as key payout ratios. The gross unlevered internal rate of return, yield, and multiple of capital is calculated based on the cash flow and net sale price entered. Enter the debt payoff on exit to generate the levered internal rate of return, yield, and multiple of capital. The next section combines the previous inputs including the sources and uses, cash flow, sale price, and debt payoff to develop the levered general partner and limited partner returns in combination with the following waterfall model. The waterfall model begins with the gross levered cash flow. Please note that the internal rate of return of the gross levered cash flow is equal to the previously calculated gross levered internal rate of return. The investment management and construction management fees are deducted from the gross levered cash flow to develop an annual distributable cash flow. The first section of the model provides a return of capital to the limited partner. The return of capital will provide a 0% internal rate of return as the limited partners are receiving back their invested capital with no return. The next tier of the waterfall model provides a preferred return to limited partners. The model example is utilizing an 8% preferred return to limited partners. The first tier of the promote waterfall is preloaded with the general partner earning 15% of returns over 8% but less than 10%. The second tier of the waterfall promote structure results in the general partner receiving 10% of all returns above 10%. Please note that the entire promote structure is based on user inputs that are fully customizable to your use case. Thank you for tuning in. We hope you enjoyed this Pro Forma Models walkthrough and encourage you to visit our website to try the model for yourself.